Good morning, everybody. This is Mark. We're back here for the morning call. It is Monday, a new week, heading into obviously the holiday end of year. So, obviously, last week was one of the more interesting weeks we've seen in a while. The downdraft happened after such a big updraft on that previous Friday, negated that entire move, and obviously we closed down on Friday pretty bad, down 300 and change. Nasdaq beaten up. And at this point, we are in correction territory, beginning that. Now, we are actually, short term, we might be a little oversold, but if you actually look at technicals, and I have the daily of the spiders up, you can just see we basically broke a pretty good trend. Now, doesn't mean we can't hold roughly around 200, but based on what I'm seeing, we broke a little bit of not even a little bit, a decent channel that was being held basically from October lows, and you're looking at 195, 192, or even lower that we could head down to. How does that happen? It's not going to happen in a day. It's not going to happen in a week. But understand and respect the fact that the indices do look a little broken. I would expect actually after the Fed maybe even a little bit of a bounce, but I can't imagine they're going to go to highs in the near term based on what I'm seeing. Stranger things have happened, but that's what we're looking at. So let's look at some of the high beta. I've been saying the 21-day has been the key indicator because we have Amazon up here. That really has not penetrated the 21-day for, since October. And it's now below there, which, again, technically is not a great sign. So, I'm looking at the next key moving average, and that's 50. So you're looking at 520-ish. A lot of times they do overshoots. Sometimes the best in breed do only, tend to stay below those key moving averages for a short period of time. We'll have to wait and see if that's Amazon's case. It definitely did digestion, which now would be resistance up here. So I was saying that was a yellow caution line, the 21-day. We're now below that. At this point in time, you might get forced selling as time goes on and the market continues to stay weak. So keep that in mind. Google, same action. You have even a little bit of a crossing pattern with the 8 and 21-day. A little bit bearish. Not that I'm so bearish right now, where the oscillators are at 63, so I would expect to bounce somewhere in here. But overall, more time would be needed for this to become a constructive chart again. So it's just trading back and forth at this point in time. But overall, technically, it does not look great. I have been looking to buy stuff, key stuff on pullbacks. I just don't know if that pullback is done yet for me to say I'm jumping in. Facebook, same. 99, 100 probably holds. Right now, broke those moving averages. Is at the next moving average. I think it's at the 50 right now. So keep that in mind. High beta definitely has taken a hit on the chin, and that goes across the board with all the ones. And I'll just put Netflix on there because that's in that category also. That ran a long way in a short period of time. I would expect back to 112 is probably in the cards, at least short term. So overall, this market, banks underperforming. Oil's really the main culprit. And you can see even today the oil is almost hitting the $35 a barrel level. Looks like it's on its way to 30 regardless. USO is something to look at. Obviously OIH is ETF. If you want the other way around, you got the DWTI. And KOLD, which is obviously a inverse times 3, and they are diesel right now, but very thin. Just be aware. That previous in late August, just FYI, is 236. I think today we're up to 220. So pretty surprising, but at the same time, oil doesn't seem to have a bid underneath it, and that doesn't seem to, be changing the overall philosophy. So I am definitely in the camp that a lot of stuff is breaking down, but overall, at this point in time, everything's a scalp for me. I'm going to look for shorts just because now they broke some key moving averages. I'm going to look for buys, on pullbacks when I think, short-term bounces are going to be coming. I think you got to be flexible both ways. I think some of the guys were calling, for shorts out there. That's great, and hopefully you did a good job and made some money. With oscillators at 63, with obviously 3 or 4 days, big days down, we're going to either have digestion or an update somewhere in here. And most likely the catalyst will be the Fed. So we have 2 more days for that regardless. But overall, I'm definitely not, bearish camp again. For me in the bearish camp, that doesn't happen very often. I don't know if I'm necessarily going to look to short everything blindly now. That's not how I trade. I still will look to buy key stocks on the pullbacks, but I'm not expecting much. And I think when charts are broken, I'm not expecting much. So I just got to be a lot more selective and a lot more price conscious than I quite frankly have been. Even though that's really been the goal, I think, of what I've been trying to say to everybody is you got to be a lot more price conscious in these ideas, because quite frankly, it is a choppy tape. This year has been choppy. In the indices, it looks like they're going to close, unch to negative, and I've been saying that. I don't see a down 10% for the indices, even though, again, you could see pickups that shock a lot of people with all the dislocation that seems to be happening. But overall, guys, I think you got to there's not even yellow anymore. It's red is on the board, and it's the caution signal. And you just got to really just respect the fact that a lot of these charts, long term, have been broken. Short term, they can maneuver around, but long term, they have broke some key moving averages, which they really shouldn't have broken, and they did. So normally, after a little bit of consolidation, and they break whichever way they break, I said you would expect that move to continue a little bit more, and I think that's the case in this situation. And it seems like it, certainly with high beta, possibly with some of the others that we don't follow as much. But overall, I think that's where we have to look. And we'll go from there. It's Monday. Could be a little quiet today, tomorrow, and then possibly into Fed speak on Wednesday. So hang out. We'll see you back on the radio in a few, and I'll talk to you all later.